Friends, today we are going to start with one of the most interesting chapter. Though interesting, but the beginners of accountancy, the class 11 student, they find the first as it is difficult. But really this chapter is not difficult, it is most simple. And I am going to explain you to make it more simpler. And the name of the chapter is the ledger. As you know, the ledger is the second step of preparation of accounts. And this ledger contains certain concepts of journal. As we start with the accountancy, the first thing we come across is the transaction, and transaction must be in monetary terms, that is written in voucher. It is the first source document. The first document of accountancy, the source document of accountancy is your voucher. From the voucher, we go to the journal. And all of you know that the journal has got two aspects. Every debit has a corresponding credit. So, every debit has a credit, and debit is equal to credit. So, it has got two sides. One is your debit, another one is your credit. From the journal, we come to this is your double entry concept of accounting. Sometimes it is called dual aspect of accounting, double entry aspect of accounting. And from the journal, we come to the ledger. From the journal, we come to the ledger. First I am telling you, we are writing the journal date-wise. Date-wise transaction. And throughout the year, every date has a sales, has wages, with salaries, purchase, discount, money transferred to bank, money withdrawn from bank. Lot of transactions are taking place on a daily basis. So journal is prepared on a daily basis, and journal reflects the daily transaction of items. By looking at the journal, suppose I am writing a journal on HR 2023. I am writing a journal. That is cash account debit 1 lakh to capital account. That is cash introduced in the business, or business started with a cash of rupees 1 lakh. This is the entry we are passing in the books of the business. So cash account debited to capital, if the narration is simple, being the business started with cash. Similarly, on this 2/4/2023, started deposited cash into bank. Deposited cash into bank. So, bank account debit 20,000. This is an example. 20,000 to cash. Being the cash deposited into bank. Right? Similarly, in 3/4/2003, purchased goods for rupees 10,000. This is your purchase account debit to cash. So if you go on writing the journal, it will be like this. So every day, not only one entry, in a day there may be thousands of entries. In a big business there may be lakhs of entries in a day. But from looking at the journal, I cannot say throughout the year how much is my purchase. By looking at the journal, I cannot say how much is the purchase throughout the year. How much is the capital contribution throughout the year. How much is my bank deposit throughout the year. What is the closing balance in the bank. What is the closing balance in the cash. By looking at the journal, we cannot say instantly. Right? And all of you know there are certain purpose of maintaining books of accounts. The most important objective is to generate quick, accessible, quick information from the accounts. So if somebody asks the person who is maintaining the journal, how much is my sales, how much is my purchase, he is not able to answer. How much money has been deposited in the bank, how much money has been collected from the customer, how much I have paid to the supplier, he cannot tell all these things because the journal is maintained on a daily basis. Therefore, after the journal, to get compounding information, to get total information, we need to maintain another step of account, that is your ledger. So ledger gives you the information, what is the total capital contribution in a year. Ledger will give you how much is my total purchase. Ledger will give you what is your total sales in a year, sales for a period. So in a period wise or year basis, what is my total figure, what is my total sales, total purchase, total wages, total salary, etc. All these informations we can get from the ledger. So this ledger is give you the total information. Right? In the ledger, we generally prepare your cash account, bank account. We also prepare the purchase, sales, all the accounts that are coming in the journal. All the accounts are prepared in the ledger. So let us, friends, let us see. Suppose I am going to start with a purchase account or sales account, whatever the case may be. This is your debit, this is your debt, this is particulars, this is your journal folio, This is amount. Similarly, here also date. This is particulars. This is your journal folio and amount. This is the format of a ledger, right? So when we prepare ledger, we have to prepare number of accounts. But how many accounts we shall prepare? We have to think that in a journal, if the journal contains 20 accounts, we have to prepare 20 ledgers. If journal contains 15 accounts, we have to prepare 15 ledger. So here one thing we can sure, that is, you know the date, particulars, that is the details, and journal folio. This is called journal folio. This is folio means page. And a journal is prepared in certain books. And in the books there are pages. This is some page, this is page 21, this is page 22, this is page 23, and folio means page. So in the journal books, the page number indicates the journal folio. So from the ledger we can trace back the journal, which page, in which page of the journal this entry is there. That we can find out by knowing the journal folio. So we have to know the date, particular, journal folio, amount. This is credit, debit, and this is your credit. The left hand side is called debit, the right hand side is called credit. And all of we know the journal is of two types. This is your journal. Journal one is your simple entry. Simple. Another one is your compound. Compound entry. Suppose this is a simple entry. Right? Cash. Business started with cash. Business started with cash. So this is cash account debit, say 1 lakh. Cash is coming to the business, therefore cash account is debited. Cash is an asset. If asset increase, then it is debit. So cash account debit to capital. This capital account is a personal account, and in place of the proprietor's name, the word capital is used. All of you know, you might have two names. Some father is calling in some name and teacher is calling in some name. So there are generally, we the people have got two names. Similarly, the owner, the proprietor of the business, they have got two names. One is your capital, another one is your drawings. When the business is getting money from the proprietor, When the proprietor is contributing, the name is capital. The business is out of love and affection. It is calling the owner as capital. When the proprietor is taking money from the business, is taking goods from the business for personal use, another name is used, that is your drawings. Both drawings and capital are personal account. So cash account debited to capital account is a simple entry, right? Another one is your compound entry, that is cash received from customer rupees 9,500, allowed discount rupees 500. The business is getting rupees 9,500 from the customer, right? And 9,500 the customer is paying and the business is allowing discount rupees 500. So how much money is coming to the business? That is cash account debit 9,500, discount allowed account debit, discount allowed account debit 500 to customer account, or we can say debtor account, that is 10,000. So here there are two debits. One is 9,500, another one is your 500, and debtor is credit with 10,000. So debit 9,500 and 500, debtor is crediting by 10,000, the total amount. Now we shall put it in the ledger. How we can put it in the ledger, that is most important, and I hope you will definitely see it. The ledger is very simple. In that we will go to the debit side and we will write the credit. In the debit, write the credit. In the credit account, write the debit. Bas, or there are no other things in here. In the debit side, you write the credit amount. In the credit side, you write the debit amount. In the left side, you write the right side. In the right side, you write the left side. So let us come to the ledger. Here in this case, this is 1, this is 2, this is your 3, and this is 4. There are 4 accounts are here. One is your cash, one is your capital, one is your cash is here again, so cash is here, discount allowed, and another one is your debtor. So in a journal, how many accounts are affected? Here cash is given 2 times, take it 1. Bank may be 10 times, take it 1. Salary may be 20 times, take it 1 ledger. So we will, in this case, in this small case, we shall prepare 4 accounts, right? So let us start with your cash account. Very simple. This is your date. This is particulars. This is journal folio, amount, date. This is particulars. This is journal folio. This is amount. Similarly, here also date, particulars. This is journal folio, and this is your amount. Right? This is credit and this is your debit. Similarly, we can prepare a capital account. Capital account. Same fashion. This is date, particulars, journal, amount, date, particulars, journal, amount. We shall prepare also the discount allowed. Discount allowed account. Here also same, date, particulars, journal folio, amount, date, particulars, journal folio, amount. Here we will prepare a debtor account. It may be a customer account also. We can call it as a customer account. Right? So this is your date, particulars, journal folio, amount. This is again date, particulars, journal folio, amount. Right? Now we can write cash account debit to capital. So cash is debit. So in cash account we will go to the debit side. In the cash account we will go to the debit side. Let us say this is 1423 example. So cash account debit to capital. You go to the cash account, go to the debit side, write the credit. Again I am telling, go to the cash account, go to the debit side, write the credit. So in the debit you have to write the credit. So let us write to capital, to capital account. This is your 1 lakh. How much you have to write the debit amount? This is 1 lakh. Right? Similarly, every debit has a credit. So capital is credit. So please go to the capital account, credit side. This is your credit side. In case of capital account, this is the credit side. So in the credit side, please write the debit. In the debit side, write the credit. In the credit side, write the debit. So capital credit. Go to the capital account. Go to the credit side. Write the debit side with a buy. Buy cash account. This is 1 lakh. Right? So this is a post journal is posted into the ledger, and the page number of the journal is written here. This is called journal folio, right? Then this is a simple journal and it is posted in the debit as well as in the credit. Let us go to this particular account. Cash account is debited with 9,500. So go to the cash account, go to the debit side, write the credit, but don't write the amount here, write the 9,500. So cash, let us go to the cash account, let us go to the debit side, write the credit. In the credit, debtor is there. So to debtor. I am taking a date maybe in the 5/4/23. To debtor account, we have to write not 10,000. Remember, you please don't write 10,000, write 9,500. Cash is debited with 9,500. So please write 9,500. Please don't write 10,000 here. It will be written 9,500, right? Then again, I am coming to cash account is debited with 9,500. Let us go to the debtor. In debtor 10,000, debtor is credit. So go to the debtor account credit side. Write the debit one, that is your cash. So by cash. By cash account 9,500. By cash account 9,500. Similarly, let us go to the discount allowed. The discount allowed, that is, this is the debit. Discount allowed is debited with rupees 500. So go to the discount allowed debit side, write the credit. So here we will take, this is 5/4/2023. This is also 5/4/2023. Write the credit, that is your debtor. This is debtor account, it is 500. So friends, sometimes people make a mistake. When they go to the discount allowed debit side, write the credit. In the debit side, you have to write the credit to debtor. People write 10,000. Don't make a mistake. The debit is only 500. Within this 10,000, 9,500 is there. 500 is also there. So, in the debit side, write always the debit amount. In the debit side, write always the debit amount, that is your 500. And in the credit, discount allowed debit to debtor. So debtor is credit with rupees 500. Go to the debtor credit side, write the date, then by discount allowed. Discount allowed, that is your 500. Right? So in this way, here debit, here credit. So in this way, we can make the journal entry posting. This is a compound entry. The debtor contains the two amount, 9,500 and 500. So Please don't go make a mistake. Go to the cash account, debit side, write the debit amount, but narration will be the particulars will be the credit. In the debit, please write the credit to debtor. Similarly, in the credit, debtor is credited. Please write by cash. Please write the debit one by cash. Discount allowed. Go to the debit side, write the credit to debtor. In the debtor, write the debit, that is discount allowed 500. In this way, we can make a meaningful posting to the ledger. And if you can manage it, in the capital account, we will take all the capital contribution in one place. In the debtor account, we will take all the information in one place. Discount allowed also one place. So if somebody asks you what is your total debtor, then from this account we can find out the debtor closing balance. From this account we can find out the discount allowed. From this account we can find out the cash balance. So ledger will give you the total information. So let us come how the ledger. So if in a journal there are 4 accounts, you have to prepare 4 ledger. If 10 accounts are there, you have to prepare 10 ledger. So at first, prepare the ledger journal. For the beginners, I am telling you, prepare the journal. Find out how many accounts are there. Then open all such accounts. Then go on posting in each account. That will increase, that will take certain time, but with practice you can reduce your time, and a time will come when you will think the journal in your mind and you can prepare the ledger straight. In a straight way you can prepare the ledger by remembering the journal, by reciting the journal in your mind. So this will be, with this require a little bit of practice, right? So now I am telling you how a ledger can be balanced. This is important. Let us take an example of your a particular account, that is your cash account. The cash book is a journal as well as a ledger. That which will come later on. But this is your date, this is particulars, this is your amount, date, particulars, this is your journal folio, this is your amount. So date, particulars, journal folio, amount, date, particular, journal folio, amount. This is your debit, this is credit. Suppose business started with cash. I am taking this to capital. Cash account debited to capital. Business started with cash. Right? that is to capital. Then again, suppose amount received from the customer, rupees 10,000. Amount received from the customer. So business is getting amount. So cash account is debit because the amount is coming to the business. So cash account debit to debtor or customer. So to debtor's account. To debtor's account, say 10,000, this is an example. Wages paid to the workers. Wages is my expenditure, wages account debit to cash. So maybe on 7/4/2023 by wages. By wages account, say it is 50,000. So 50,000 wages are paid. Rent paid, say on 10/4/2023 by rent account, this is say 10,000 is paid, right? Cash deposited into bank, so bank account debit to cash. In the cash we have to write by bank. This is your say 15,000. From the cash it is deposited into bank account debit to cash account 15,000. Maybe these are the entries. First we have to see which side is heavier. Suppose a balance is here. Our job is to make a balance. This is your balance. This is debit is equal to credit. But if we take this here, we see this is your debit side, this is your credit side. First we have to see which side is heavier. This is 1,10,000, this is your 75,000. So this side, debit side is more. So please add the debit side here. This is 1,10,000. Right? So this is 1,10,000, this is heavier. And this is your 75,000, this is lighter. So in which side we have to put the load? The load will be 35,000 here, so that both sides will be equal. Now after putting 35,000 in the credit side, this is debit, this is your credit. After putting 35,000 in the credit side, you will see both the side will be equal. This will be 1,10,000. This will also be 1,10,000. So now we will balance this. Here 1,10,000, here also you write 1,10,000. And at the end of the month, this is 34/2003, we can write by balance CD. This is your 35,000. So that both the sides are equal, debit is equal to credit. Now debit was more, this balance is debit balance. So on the next day, 1/5/2023, let us write to balance DD. This is your 35,000. So in this way we can balance the individual accounts. So this is the end of the month. In the first day of next month we have to write 1/5/23 to balance brought down. This is your carried down, this is brought down, right? So in this way we can balance the accounts, right? So all the first we have to think of the journal. We have to find out how many accounts are there. We have to open ledger for each account. We have to make a posting. Then we have to go for the balance. So friends, in the next class we will continue with the problem so that you can understand journal, ledger, trial balance. The step 1 journal, second step ledger, and we can prepare the trial balance. And the trial balance will be tally, right? If you find the video as suitable, the class is informative, please offer your comments and help in this way. Thank you. Thank you all for your patience.